I got on radio and television over there and in the newspapers, and I told them exactly what these guys were trying to pull. And so they didn't get to do that. But the situation is insolvable. Same answer as it was 2 years ago. Go to default, get rid of the euro, reintroduce the drachma at 50% of the value of the euro, and default on everything.
Mm-hmm.
And that's the only way they can get themselves out of it. Otherwise, they'll be paying for the next 50 to 100 years to pay these bankers back who gave them loans, which they should have never given in the first place, knowing, and they created the money out of thin air, knowing that they would get the IMF and the European Union to make the people pay for the bad investment decisions that the banks made. Okay, that's one part of it. The other part is...
And we've got about 30, 40 seconds.
Okay, they had to put up all the money. And in putting up that money, $500 billion, it's not enough. They need $4 to $6 trillion. And so they wanted to leverage that. And it's against the German Constitution to do that. And they're supplying half the money, more or less. And so the answer to that is there is no solution.
Okay. We'll see what that means as we continue. We're going to take a break for news. Bob, we look at Greece, and I think everybody pretty much knows and understands that it's going to default at some point. They cannot pay back their debt. The wisest thing for the Greeks would be default. And then we're looking at a possibility of credit downgrades, basically blitzing across the European Union. France, Germany may lose their AAA rating. It looks as if the euro is at least partially doomed. I mean, if France loses its AAA rating, the banks in France have some big problems. Germany doesn't look like they can really prop up the entire European Union. Certainly the German people don't seem to be inclined to do it. So the idea then is a contagion. Is that what you're seeing? And if so, what kind of a timeline are you looking at?
Well, the timeline is very difficult because these people keep on stalling. I mean, they had a problem the whole month of August and part of July, and nobody attended. They just went off on vacation, and the typical socialist mindset, everything's going to take care of itself. I don't think so. But what's come of all that is that they don't have a way out, and they want to keep the euro together and the Eurozone within the European Union. There's 27 European Union members. Only 17 belong to the Eurozone. The rest still have their own currencies. But they're still involved in the bailout of Greece and perhaps Ireland and Portugal, and maybe Belgium, Spain, and Italy. And so it's just like shoveling sand against the tide. It's impossible. And so they're trying to extend and elongate this game that they're playing as long as possible.
Yeah.
And when that'll pop remains to be seen. But the German citizens are 65% against additional funds for the bailout or leveraging. And leveraging is against the German Constitution. It's illegal.
Right.
And the only way it can be changed is that they would have to have a referendum, and the people would have to say, yes, we want to change it, and we want to leverage and all that sort of thing.
And that's not going to happen.
And so with that said, it isn't going anywhere.
Let's go to the phones right now. 602-324-1510. We will start with Steve in Chandler. Good morning, Steve.
Good morning, Sinclair, and good morning, Bob.
Good morning.
Basically, I've learned a wealth of knowledge from the both of you on this whole European situation. And as you know, they're having emergency meetings this weekend and for the next couple of days. And they're supposed to be announcing something, I guess, later today and especially this coming Wednesday. And I'm just curious what Bob may think they may be announcing and what would be the possible effects on our U.S. stock market from those announcements.
Well, they think that the EFSF, which is the European Financial Stability group that they have, what they're going to do, I think, is propose that grouping, which supposedly in mid-2013 will become known as EMS and have even more power. That power would take away the sovereignty of every one of the European nations. And Germany knows that, and they're not going to let that happen. But they want to turn that group into an insurer. So they get $500 billion has been pledged. They'll knock the figure up to $3 trillion, and the EFSF will insure the difference, which would be $2.5 trillion, and 20 to 30% approximately of the action would be backed by European insurance companies. That's one of the ideas that they have. The other one is ring-fencing their countries and saving all the banks like we discussed earlier with Dexia, and is going on in Germany and France right now. And Germany and France are in the process of printing Deutschmarks and French francs. Now, that's as a backup. They say this may not work. Well, I think they're right about that. And so these are the kind of things that you've got going on. They're unworkable. I mean, the game is over. And the dream of a one-world currency and a one-world government and one world this, that, and the other thing is over for them. It failed. And it should have never been started in the first place. It was doomed to fail. You could see it from the very beginning. It defied reality. It was an unnatural relationship. Not only the Eurozone within the European Union, but the European Union itself. And the goal is to take away the sovereignty of every one of those countries.
Now, for investors, with a look to the markets, with a look first to the equity markets, as this game of extend and pretend is played out, do the markets continue to play along?
Well, the stock market is in the United States and to an extent in Europe. Others in Asia aren't doing as well. And the reason we're seeing this is twofold. The manipulation 24/7 of all markets in the world by the United States government legally. That's number one. Number two, I think they're anticipating this new QE3, which would essentially further bail out the banks, taking some of their, maybe all of their garbage, financial garbage away from them and taking it on their own books. And, of course, one of the things that they don't talk about when they do this, once the exchanges are made, there's a monetization process that takes place. And that money goes into the economy. And that money is highly inflationary, very inflationary. But in the meantime, the market, especially the stock market, knows this, and that's good for them because they can make more money, and that's why the market's selling where it's at, and that's why bonds are at their highs.
That's why the equity markets sit there and say, free money, money created out of thin air. They love that. And then you look at that as well, and we should understand these conditions for gold and silver-related assets over the long term. Certainly that's a positive for gold and silver investors. Short term, though, are they going to try and push down the gold markets to try and discourage the idea of honest money from catching hold?
They've already done it 3 times. The first 2 were unsuccessful. This time it's been somewhat successful. And I'm talking over the last 3 months.
Yeah. Do you think, though, that they're going to push it down further from the Further from the 1600 level, though, do you think we could see moving lower from here? Or have we found some support?
I think we found support.
Good.
And it may be a little premature, but I think we saw a turn to the upside toward the end of the week. And that's understandable. You know, what they're doing, the U.S. government, and generally through hedge funds, they're shorting gold and silver. The banks are involved, although I must say that many of the banks with very large naked short positions in the gold and silver markets have covered their shorts. It doesn't mean that they can't go short again, but I don't think so. I think they'll be or were on the long side of the market. And so I think they're going to be joining us on the upside. And you got to remember, don't forget that we were talking about $2,500 gold from Morgan Stanley, J.P. Morgan Chase, and they're sticking to it.
Stick around, more to come with Bob Chapman. We will continue with Bob and your phone calls on Hard Money Watch. Let's go to Bill in Glendale. Good morning, Bill.
Sinclair, thanks for taking my call.
Thank you.
And for Bob's support on your program. You know, this topic that you're talking about, or Bob was talking about, the banks, and you've endorsed it many times, Bill Tatro and all the other programs on KFNN I listen to quite often. It seems like there could be a petition that could be initiated by you that maybe all of the listeners, which are maybe hundreds and thousands on KFN, could endorse, and we could get some answers from some of these Republican candidates in their debates or something, or maybe even send a bunch of letters to the Senate to see if we get some action. Because sometimes numbers really add up.
Well, that would be fun, but as far as the Republican debates, they're very concerned and busy right now in trying to figure out who mowed Mitt Romney's lawn 5 years ago. They don't have time for something like this, you understand. But it brings up an interesting point, Bob, and that is that Bernie Sanders, Ron Paul have been active in trying to figure out some way to get past the Federal Reserve. And I think that that's a key issue that probably should be addressed. And I don't know that we can resolve everything with the KFNN listenership, but maybe that's something that has some hope. What are your thoughts?
Well, I'm in favor of Ron Paul. I think so many people are, but it seems like they're squashing him. They don't want him to come forward.
No.
Well, if you read the forecast, we have a lot of statistics in yesterday's issue, which unequivocally prove that that's what's going on. And the media's being hijacked, deliberately so, to make him either look in a, unfortunately, lesser light, so to speak. And you're right. They're trying to rig the election, and they might do that. All I can tell you is that you people out there, if Ron Paul doesn't win and other people elected to think in the same way that he does in either party, then you got a serious problem. Because you found that you cannot go through the system anymore to do what needs to be done.
I'm a registered Democrat, Bob, and I think Ron Paul would be a winner.
Well, I sure hope so, because it's going to save us a lot of pain. Because if he doesn't win, you don't want to see what your country is going to be like.